Tesla stock is breaking out to a new high of this cycle as these short seller losses mount, adding another $800 million worth of losses today. Well, the good news keeps on coming, and it's likely gonna continue to keep on coming from here. Tesla's earnings are on Wednesday. That's when I expect Tesla stock to see an even bigger breakout. Now, today you're getting a lot of good news on Tesla, and this news is super bullish. Some very strong indications that we're going to get better than expected earnings, but most importantly, better than expected margins. That's the big story from the bears. It's margins, 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 as Dan Ives said today on Twitter. All of this good news has not stopped the haters and the bears. Probably the biggest hater of all time for literally everything is Elizabeth Warren. She sent a 9-page letter to SEC Chairman Gary Gensler to try to subpoena Elon Musk about a plethora of different reasons. By far the biggest hater of all time. We have all of this and much more here in this video. We're also going to talk about the potential for a short squeeze as well as a gamma squeeze from here because the good news keeps coming. The stock keeps going higher, and likely after earnings, it's going to be the same story. So if you want to stay up to date with everything happening in the markets as well as with Tesla stock, the good, the bad, the ugly, the great, all in one video every single day, well, hit that subscribe button as well as the like button. We keep you up to date on everything you need to know. I think it's appropriate to start off this video with talking about why Tesla stock is up 2% on the day. A lot of it has to do with what happened over this weekend. We did get news that Tesla hit the ABS market. The ABS market, as I have reported to you guys two other times, is the asset-backed securities market. Everyone, even Meet Kevin, was making videos talking about Tesla potentially needing to raise capital to fund their expansionary efforts. This is pretty straightforward. That's the reason why the stock market was ever created, to raise capital to sell stock. Well, that puts downside pressure on the share price. So Tesla went to this ABS market to sell $1 billion worth of auto leases, prime auto leases, and they're probably going to settle out with a 5.5–6% interest rate that they have to pay on this. But Tesla's going to get $1 billion up front. This likely means dilution, at least in the form of selling stock, is not going to come anytime soon. This is one big reason why Tesla stock rallied in overseas trading last night and is continuing higher today. Another big reason why Tesla is in the green today and seeing a new high of this cycle is the news that came out Saturday. Tesla officially produced the first Cybertruck off of the assembly line. This is a pretty good sign that we could expect to see Cybertruck deliveries sooner than analysts' expectations, in which they forecasted really Q4 or first quarter of 2024. This looks like it could be a reality in Q3, and we probably get some news on this on Tesla's earnings report. They might give us some kind of clear roadmap to getting the first Cybertruck deliveries. Let me introduce to you the most unhappy Tesla employee that you will ever see. Everyone's smiling here in this picture. Cheese, it's a Saturday afternoon. It's good to be alive. Not this girl. Arms crossed. You know someone definitely shit in her Cheerios to start off the day. Let's now talk about the news that is having a very bullish effect on Tesla stock today. This news is actually from Ford, and it came out at 8:30 in the morning this morning. Ford cuts their prices on their electric F-150 Lightning pickup trucks by as much as $10,000. Ford says that improvements to lowering the cost for battery minerals have paid off. Now, why is this bullish for Tesla? Well, Tesla has cut prices, and analysts expect this to hurt margins. Ford, GM, they have really not cut prices all too much, like 2% so far in 2023. Well, if Ford is seeing their margins improve due to mineral costs going down, well, odds are that's the same story for Tesla. and margins have likely come in better than expectations. And coming on Q2 earnings this Wednesday for Tesla, that is the biggest story. It's apparently all about the margins. If Ford is seeing improved margins, long story short, so should Tesla. Ford does not have margins to cut prices. They lose money on all of their EVs. This is a strong sign that Tesla's margins are likely better than expectations and probably going to get even better from here. The news that Giga Shanghai employees have received record high bonuses as well for Q2 is also a pretty good sign that Tesla's going to have better earnings than expectations and come in with better margins. But that is not stopping the bears today. The losses are starting to explode for the short sellers. The average short in Tesla stock is down over 100%, as most of them did short in that 120 to 150 range. Now, the dollar amount that is currently sold short in Tesla stock is again hitting a new high of this cycle, which makes a lot of sense considering Tesla stock is hitting a new high of this cycle. Short dollar amount is $26.5 billion, with the highest number of shares that have been sold short in over 2 years. Now, recently, back here on July 12th, which was 4 trading days ago, short sellers lost $208 million. The next day, short sellers lost $566 million. And the last trading day, which was Friday, short sellers lost $327 million. And that loss today is likely to come in over $1 billion, estimated at about $850 million as of right now. So the losses are piling for the short sellers. If we really blow this chart up, this deep purple, these are days short sellers lost. And ever since this rally really started to kick into high gear, really above $180 per share, short sellers have seen the losses piling up. And this is leading to the very real possibility of a short squeeze coming after earnings, because after all, you can only take these kind of losses for so long. Considering this currently is the highest number of shares that we've seen sold short in Tesla in over 2 years, and they all got in at the worst time possible. If Tesla gives us better than expected earnings, better than expected EPS, instantly lowering the valuation for Tesla, if the markets don't crash organically, right? Meaning that if earnings are bad or if we go into a recession in the near term, if we don't see any of that, there's no chance Tesla's going back to those prices that we've seen in the first half of 2023. So odds are some shorts choose to start covering on short positions. But that's not the only story here. The option activity as well is exceptionally strong. Today, you have seen 348 orders totaling $178.45 million with a positive order value of 59%. If we take a look at next week's expiration, you have volume today on the call side of 61.5%, volume on the put side of 38.54%. If we look at this as a bubble chart and take a look at some of the volume numbers, by far the calls are seeing the vast majority of the buying, but that $300 call is seeing volume of 76,000 here on the day. That 310 call is seeing 20,000 contracts purchased. The 315 is seeing 13,000. The 350 call is seeing 18,000. The 320 call is seeing another 18,000 for volume. And the 290 call is seeing 47,000 for volume. This is much higher than the numbers that you are seeing on the put side. And as you guys know, a gamma squeeze works as followed. As Tesla stock goes higher, these strikes start to go into the money, and market makers have to start buying Tesla stock in massive numbers, in quantities of shares in the millions range, to make sure they can deliver shares to you at your strike price. For an example, if you had a $300 call on Tesla, well, you can go out and buy stock at $300 per share. You profit if the stock is, say, $350, and you have an option for $300. You could buy your stock at $300, sell it for $350. That's how you profit from buying options if you actually exercise them. Well, the market makers aren't going to take a massive loss because you won on an option. What they do is they'll go out and buy stock of Tesla at $299 per share. So once you ultimately exercise your option and get stock at $300, well, market makers sell you the stock that they bought at $299. So they still make some money on the trade. That's why a gamma squeeze works, because as the stock continues to go higher, market makers have to buy more shares of Tesla, because ultimately people are going to exercise those options and they're going to have to sell you stock of Tesla at a much lower price than where it is. And they just do that by pulling from their inventory because they bought even lower than your strike. Hopefully that makes some sense. If it does not, long story short, the higher Tesla stock goes, the more market makers have to continue to buy. That is on top of the short sellers that likely after earnings will opt to end the pain and cover on those short positions. At the time of recording this video, Tesla stock is up about 2% today after hitting a high earlier in the day at $292.23. Tesla is on fire, and today you have officially broken above the longer-term downtrending line. This is a line connecting the previous peaks that you have seen in 2021 as well as 2022, and a break of this line is a clear sign that Tesla's stock is going higher. So you really want to watch this over the next 2 trading days before we get earnings. If this level is supported and Tesla stock remains at this higher end level, even potentially reaching as high as $300 before earnings, this would be a clear sign that, again, Tesla's earnings probably going to be better than expectations, and Tesla probably going higher after earnings. Now, as far as the RSI is concerned, you are at 70.20, so you are technically slightly overbought today, but this is far from a problem. The MACD is also curling up, heading into positive territory. Now, on a positive or negative basis, the MACD is at 15 positive, so you're at the higher end range of what we have seen historically for Tesla, although historically speaking the MACD can get much more bullish from here. The highest you've ever seen on the MACD was almost 40, so you're less than half of that as of right now, but the last couple of rallies you have seen with Tesla put the MACD at about 17, so you're roughly in line with what we have seen throughout the rally in the beginning of 2022 in April, as well as the rally that you've seen in August of 2022. Although Tesla stock is far under those price points of where it was at in these previous rallies, Tesla's 52-week high is about $314 per share. That would still be about $30 move from here, so you do still have some ground to cover before the stock is really at an unjustified level, and depending who you talk to, unjustified has many different definitions from person to person. But notice how Tesla is hitting a new high of the cycle, and the RSI is at one of the lowest points it's been at throughout this latest rally, call it. The RSI is lower today than where it was when Tesla was the most overbought stock in the NASDAQ with an RSI of almost 70 back here in mid-June. So there's still a lot of upside you could see from here before that RSI gets back to 90. The $85 gap between analysts with buy and hold ratings is wider than in recent history. In May, before the recent stock price run started, the average price target of analysts with hold ratings was about $180. The average price targets of analysts with buy ratings was $240, making the gap $60. So the gap has widened about 30% in this latest rally. Now, what they also point out is the options market looks like it's sleeping heading into the earnings report. Option prices imply the stock will move about 4% up or down. following earnings. Over the past 4 quarters, the stock has moved an average of 9% up or down following the report. So there actually could be a lot of opportunity in the options market this time around playing Tesla's earnings. Now, if you guys want to come see the trades that I currently have on Tesla, one trade could yield $10,000 as a max return if Tesla closes at $350 or higher per share about 2 weeks after earnings, with a max loss of about $400. If you guys want to see that trade, link down below in the description of this video. Sign up for the trading community and you will get prompted on how to sign up and join that. That is not a texting alert kind of thing. That is somewhere where you can come join, ask me questions day in, day out, 24 hours a day, 7 days a week, holidays, all of that. I am available to help each and every single one of you guys grow, but also to help each other grow and build our portfolios. There's a lot of cool tools over there as well. I don't have enough time, obviously, in this video to go over everything, so go check it out if you guys want to be a part of it. Long story short, Barron says this could make for a very volatile after earnings effect due to the low implied volatility heading into Tesla's earnings on Wednesday, as well as the gap between price targets from hold and buy analysts. There's a big gap here, and you're either going to see a lot of price targets start to get raised from those hold ratings and even those holds turning into buys, or you're not going to see a lot of movement here. We've seen a lot of price target increases, but you haven't seen a lot of analysts go from a hold, say, to a buy. Colin Langan, an analyst with Wells Fargo, raised his price target from $170 per share all the way up to $265 per share today. He maintains his equal weight rating. Now, this Wells Fargo analyst says they are cautious about how price cuts may have affected Tesla's Q2 auto margins. This is the reason why Tesla stock is going to go absolutely insane after earnings, in my personal opinion, because these analysts, they're concerned about margins, and they expect margins to come in about 17.5%, but they won't acknowledge some of the other things that have happened positive over the last quarter that could have helped out Tesla's margins. Number one, as Ford says, the price of raw minerals coming down. We've seen that. The price of lithium is down over 60% from its all-time high you've seen in November of 2022. That should start to have a positive effect on Tesla's gross auto margins. But just Tesla's margins overall could be affected positively by Tesla's shipping costs coming down. Freight rates are in deep recessionary territory, and they've continued to fall month after month after month. This should start to have a positive effect on Tesla's margins. The fact that Tesla has cut hours and cut bonuses last quarter, that should also have a bullish effect to Tesla's margins. But even on top of that, energy and storage, that should see some really good growth quarter over quarter and super good growth year over year, excess of 150% or more year over year. None of these things, these analysts believe, will have helped out Tesla's margins. I don't buy that, especially when you connect the dots of Tesla giving out record bonuses to their Shanghai employees. That's not something Tesla would do if their margins were falling or expected to fall in the future. This is a very positive sign. Things are getting better for Tesla. Dan Ives said on Twitter today, margins, margins, margins. I've said Tesla should be able to top Wall Street Q2 estimates, but the big focus is on auto gross margins. To quote, gauge the impact of price cuts and what this means for margins going forward. Dan Ives also expects auto gross margins to be at about 17.5%. However, Ives added, gross margins should, quote, ramp back up over the coming quarters and back toward the 20% level heading into 2024. And he makes a great point here that margins improving from here, and this being the trough, kind of the worst that we're going to see for Tesla's margins, last quarter, maybe even possibly this quarter. I could be wrong. Maybe those four things have had no positive effect to Tesla's margins. Well, as long as Tesla says margins should get better from here, markets are forward looking. So the bearish analysts can say whatever they want about Q2 margins or Q2 numbers, but it's not about Q2 anymore. It's about Q3 and Q4 as well as 2024. How are things going right now? Are they going to get better? That's what will drive Tesla's share price higher, in my personal opinion. Analysts expect profits to edge up around 4% to 79 cents per share. Wall Street expects revenue totaling $24.26 billion, up 43% compared to last year. My personal estimate for EPS is over 90 cents, could be as high as 95 cents per share. And the total revenue number could come in closer to 24.8, 24.9, $25 billion. This would be far above analyst expectations. But investors will listen for news about an upcoming updated Model 3. Investors will also look for news on a future Mexico plant, which will make Tesla's next generation model. A lot of people are claiming it's going to be that $25,000, $24,000 Model 2 is what it's been nicknamed. Musk has hinted at the next-gen model, but no more than that. Another big development that you want to see on Tesla's earnings call is definitely going to be the Cybertruck. Since we just got the first presumed Cybertruck built on an assembly line, does that mean that we're going to be getting deliveries here shortly? Maybe by the end of Q3? That is all something that could have a positive effect on Tesla's stock. But not even just that. Something that I've mentioned in the last video that I don't want to go unnoticed, I want everyone to hear this, is essentially if Tesla beats that EPS number, the multiple instantly falls. Because at that point, you're going to see a higher EPS number for 2023. And then that means your EPS number or your PE number comes down. So this valuation concern that analysts have, well, the higher that EPS number, the lower the valuation. So instantly, this earnings, you're going to change the valuation profile for Tesla as long as Tesla beats to the degree in which I expect they will. Leave it to Elizabeth Warren to be the biggest hater of all time. She urges the SEC to investigate Tesla over Twitter ties and corporate governance. Senator Elizabeth Warren is urging the U.S. Securities and Exchange Commission to investigate Tesla and its board of directors over possible conflicts of interest, misappropriation of corporate assets, and other negative impacts to Tesla shareholders related to CEO Elon Musk's Twitter takeover. The 9-page letter first obtained by CNBC was sent to SEC Chair Gary Gensler on Monday. Senator Warren wrote that Tesla's board's apparent lack of independence from Musk, combined with inaction and incomplete disclosures, raise questions about possible violations of securities laws and exchange rules which fall under SEC's jurisdiction. She doesn't even know what she's trying to argue here. She wrote on Twitter that Musk could decide to run the company, meaning Twitter, to maximize badly needed revenue, even if that includes great deals for Tesla's competitors and potential injury to Tesla. Does that even sound like an Elon move? To help out your competitors and injure and hurt Tesla? This girl doesn't know who she's messing with, apparently. Contrarily, she said Musk could opt to run Twitter to benefit Tesla through favorable algorithms or free advertising. She is really reaching here, which, I mean, it's if he owns Twitter, you might as well use it to Tesla's advantage. She has no idea what she's talking about. We also had some very encouraging data that came out at 8:30 in the morning today from the New York Empire State Manufacturing Index. We were expecting this to fall to negative 4.3. Some forecasts were for negative 6. Last month's reading was positive 6.6, and this reading came in at positive 1.1. I've said this before and I'll say it again. Inflation is no longer the problem here, right? That's not what is causing the markets to fall or rise. It is having a positive effect to making the markets rise. I shouldn't say it's not having an effect at all, but really what the markets are watching right now is a recession. Are we going into one or are we not going into one? So during 2022, every time you got bad economic data, the markets would go up 2 or 3% because that meant the Fed isn't going to have to raise rates as aggressively. Well, now this time around, inflation's coming down. You now have a 3% inflation on a year-over-year basis. That means the Fed's probably not going to raise rates too much, right? Maybe one more time. That's it. We're done. From this point on, you want to see obviously inflation continue to come down or at least stay at these current levels, but you don't want to see the economy deteriorate. That is what could cause the markets to crash alongside other big tech earnings. If those come in bad, you could also have a big problem. Now, you also had bond auctions today. The 3-month and 6-month bond auctions came in at 5.25%, both of these. These were roughly in line with what you've seen at the last 3- and 6-month bond auction, showing there is still good demand for these bonds as the Treasury has to raise over $1 trillion from now until the end of the year to fill up that TGA account. Remember the debt ceiling crisis? It ran the TGA almost completely dry. That is why we were facing a potential default. Well, now the Treasury's sucking trillions of dollars of capital out of our markets in these bond sales because they need to refill it. So this can be a negative catalyst, a negative factor, a negative liquidity draw on our markets from now until the end of the year. That's why I've been paying special attention to these bond auctions, and essentially what the bond yields come in at tells you good demand or not. The better the demand, the lower the yield. The higher the yield, the worse demand. Kind of like a dividend stock. People want to buy that dividend stock, yield goes down. People want to sell that dividend stock, yield goes higher. So that is going to just about do it here in this video. That is everything you need to know about Tesla stock as well as what's going on here in the markets today. Some great things on the near-term horizon for good old Tesla. Hit the like button and subscribe to the channel if you have not done so already, and if you made it to the end of this video. Also, check out the links down below in the description of this video for the trading community, for some merch if you guys want to rock Tesla everywhere you go, as well as last but not least, to get yourself some free stock with Webull. Sign up, deposit $1 and get yourself 15 free stocks. It's by far the easiest thing, the cheapest thing you can do to make some money today. Check it out if you have not opened an account already with Webull. Thank you for watching. Enjoy the rest of your day, and I will see you in the next video.